When the market flees from hardware tech, it tends to go right back to the safety stocks, including PepsiCo, the parent of Frito-Lay. They're about as low tech as it gets. I mean, I grow potatoes. All you need is some dirt, some old spuds with eyes, bury them, and come back 4 months later. Well, let's talk about the semiconductor shortage, the chip shortage that we really have to worry about right now. Okay. For years, we've embraced companies that go digital, right? Anything that's simply mechanical is viewed as a loser when matched against a digital opponent. Cars, appliances, everything. But to go digital, you need these. Look at this. You need this. Here's one that's from Intel. Remember them? There's a Samsung one. I mean, here's some really small ones, okay? Here's some better tasting ones. You need a lot of these, right? Which is why we've now exhausted the supply. Pretty much every semiconductor plant on Earth is running at full capacity right now, and it's still not enough. They still taste bad. Not bad. I spoke too soon. You got all sorts of chips out there, from expensive proprietary ones with huge profit margins to plain old commodity chips, which normally aren't that lucrative. The commodity chip makers don't want to build new foundries because they're making a killing right now, and they know pricing will collapse once they add more capacity. Making matters worse, American companies have spent decades converting to just-in-time models. They keep inventories as low as possible in order to save money. But the moment the supply line gets cut, well, the whole business grinds to a halt. In China, businesses have a lot less faith in the invisible hand of the free market. So they stockpile components. That's the just-in-case model. And double or even triple order. Not a lot of shortages in China. Have you noticed that? How bad is it? Okay, in the last 24 hours, we discovered that many companies have been laid to waste in this country by semiconductor shortage, with many more predicting that it's coming for them next. Every day, we seem to have a new casualty. Today, there were 3. Ford Motor, which we had on the show last night, Caterpillar, which we'll be hearing from later tonight, and Apple, which reported an astonishing set of numbers yesterday. It just didn't matter. Apple gave us a quarter for the ages. When I saw it, I thought it was looking at future projections, not some registered numbers. Some of the divisions were electric, like Macs and iPads, but everything Apple makes, well, guess what? It's not chock full of these. It's chock full of these. So the stock ultimately gave up the gains because management said they could take a $3 to $4 billion hit from the semiconductor shortage. Some would argue that Apple deserved to go down because this is as good as it gets. Its peak. I think that's dead wrong. If we're really looking at the peak, how do you explain the extraordinary moves in Alphabet and Facebook? They wouldn't be running like this if business is peaking. No, the difference is that Alphabet and Facebook are internet companies. They don't have much exposure to the chip shortage. Instead, they have exposure to the booming advertising industry. Same goes for Amazon, which shot the lights out when it reported after the close tonight, and its stock is actually rallying. I told you endlessly that customers would stick with them even when the world started going back to normal. Again, Amazon's a retailer with a big cloud infrastructure business and an advertising kicker. For the most part, they don't need no stinking semiconductors. How about the second victim, Caterpillar? One of the reasons why I love my Caterpillar backhoe, yes, I actually have one, is that the electronics make me feel like I actually know what I'm doing. It's a spectacular machine. It's loaded with tech, digitized to the max. We're going to drill down later with CEO Jim Umpleby, but you need to know why the stock got crushed today. It wasn't because of the quarter, but because people are worried about rising raw material costs, steels, and then once again, these stupid semis. Then there's Ford's last night's casualty. This one got hit by the chip shortage not once, but twice. The first time because Chinese automakers double ordered so many chip breaks when their American competitors were worried about the pandemic and they thought it would obliterate sales. It did the opposite. Then it got even worse when a terrible fire damaged a huge Japanese semiconductor foundry that's responsible for about a third of the chips that go into autos. The first fiasco was already baked into the stock, but the second one, the fire, that was a body blow that knocked Ford stock flat on the canvas. At the same time, we got a string of excellent quarters from the food group. Yeah, the food group. I mean, this allows me to set up my elaborate chip conceit. See, they were able to shine because everything digital is getting killed. And the drug stocks are also being crushed because they had some really ugly quarters. That's why the market took notice. PepsiCo actually reported during a flood of tech earnings, and initially nobody cared. But they cared today. Mondelez, Hershey just delivered some terrific numbers, too. While we're at it, let's throw in Domino's Pizza, which exceeded expectations and saw its stock surge. More on that later when we speak to the CEO.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call. at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.